Results out from civil engineering and construction group Sanyati Holdings this morning show a 42% rise in revenue to almost 2 billion rand for the year to February, while profit from continuing operations rose 36% to 69 million rand. Joining me with more now is CEO Malcolm Lobban. Malcolm, thanks for coming into the studio today. Malcolm, normalized fully diluted headline earnings a share from continuing operations up 15%, but your headline earnings a share down 38%. Can you chat us through the discrepancy here? Because, of course, there were accounting changes and you also sold your road surfacing unit, didn't you?
That's quite correct. It is a little bit confusing at first glance. Of course, if I can just come back to that question, we're very happy with the normalized earnings increase headlines of 15% and EBITDA significantly up, something of the order of 60% up. What the discrepancy we talked about at the interim level, we made this accounting estimate adjustment of 50 odd million at the end of August, is essentially a lot of historic issues which came to light and caused for a change in estimate, new information that came to our attention as the new management team. So we took that on the chin back in August. And we'd really like to stress that we've dealt those issues and they're behind us. We signalled in August as well that we would be offloading our road surfacing business. We identified it as non-core, and we happily managed to close that transaction out in February this year. So that resulted in a loss of something of the order of 50 million rands, discontinued operations. And both of those amounts clearly are material and account for the big difference between the normalised and the headline earnings.
Okay, I see the share price was up quite nicely a short while ago. It's up about 2% at this stage. A while ago it was up about 6-7%. So it looks like the market's focusing on the positive number rather than the negative number. And just looking at your margins, though, because you mentioned EBITDA, the EBITDA margin up from 7.4 to 8.6%. So although you're seeing some competition in the markets at this stage, it's not really affecting your pricing, is it?
That's true. Of course, we have to acknowledge that we're in a lag industry, so one still continues to benefit from all the good work that was done in the past and the order book that was created in the past. And those margins are very positive, and certainly we're happy that they're up on the prior year, but they don't reflect what's happening on the ground today, where traditional tender markets are really very competitive.
So would you expect that margin to come under pressure going forward from here?
We would. Again, one doesn't need to lie back and just accept it's a supply-demand issue, and pricing is a simple function of supply and demand. Clearly that is an issue, but we think there's some nice niche opportunities, particularly as we package solutions including design and construct and finance, and niche markets as we've identified in telecommunications and elsewhere that are offering as good, if not better, margins in the past. But overall, if we take traditional SANRAL type activity, margins are certainly under pressure right now.
Confirmed order book of 1 billion rand for the next 12 months, pending order book of almost 1.8 billion rand. What sorts of projects are included in there?
Stephen, quite a mixed bag. Mining, we've got some very interesting mining opportunities up in the Northern Cape. We're expecting to make some real progress on the back of a track record that we've established up there. We're the lowest bidder on a major job in KwaZulu-Natal for our client itiquini. The price there is 700 million.
That's the municipality down there?
Correct. It's a water pipeline and road realignment job. We were the lowest bidder some 3 months back. We were urgently awaiting for an award. We expected within the next 6 weeks. So the big ones like that, there are a whole lot of smaller jobs where we're pretty confident we're going to secure work. The big question for us is just how quickly is that going to come through?
I think most of the construction companies are saying the same at this point. You were involved in some of the World Cup projects. How are these being replaced? Because I presume they're mostly finished by now, or hopefully finished by now, because it's only 23 days to go. How are these being replaced by new projects? And are you starting to see any of these government infrastructure projects, apart from the itiquini project, which you just mentioned?
Stephen, yeah, we're in a slightly better position than our major competitors because we don't have this huge capacity coming off the major jobs. We did participate, thankfully, in the World Cup, but on a much smaller scale. For example, at King Shaka Airport, where with the Olympic Consortium we were only a 10% partner. We're starting to see projects come through. We just, in the last 6 weeks, have had some Free State Roads awards. We've recently got a SANRAL award in Bergville Ladysmith. We've got an award just the other day in Mpumalanga, a road just outside Barberton. So there's a lot still happening. In our case, we're not seeking the 3-4 billion rand project, as you will well appreciate. So the 50 to 250 type deal is exactly what we're after, and activity is there.
I was quite intrigued. You mentioned some telecoms type projects you could get involved in. What would you be doing in those?
Fundamentally, or in the main, fiber optic cable laying, where we're trenching and laying cables, long haul, short haul, within the CBDs. We've just been awarded a job from Bloemfontein down to Toes River. We've been working at it for some time with our clients, MTN and Vodacom. Interesting work, attractive work, something that we feel very confident about, and a lot of activity that we anticipate in the months and years ahead.
And would you expect more such contracts in niche sectors like telecoms?
We believe there are, and particularly, there's some changing dynamics, as in any industry, but in our industry there's a changing dynamic towards package solutions where we really think there are niche opportunities, where one can cobble together the design component and the finance component and come with something that really works for our clients.
Well, given the slight uncertainty with the infrastructure projects going forward from here, what's your prospects for your 2011 financial year? What are we looking at there?
I think a difficult question to answer, Stephen, and I'd be hesitant to make any strong commitment. I think the underlying theme is there is a level of uncertainty, and the major reason is the question of timing. So there's some short-term challenges. We know that we're in for a quiet time, for example, over the World Cup, as we welcome all our foreign visitors to South Africa. So there are issues around that, but we would expect that the sort of activity we've had in the last 12 months is very much achievable 18 months forward.